Hey guys, it's Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys go to like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. If you guys could, share my videos and share my channel with anyone. I'm trying to grow my channel as much as I can, and I definitely need your guys' help in doing so. Getting started chasing me Wednesday, March 15th. There's a jam-packed update. We had a lot of information to cover that impacted the financial markets. The two biggest ones was another bank went down. This was the second largest bank in another country, so it didn't actually reside here in the United States, but it definitely plays a role in our financial markets, as well as the biggest thing that I want to cover, in my opinion, is the Voyager bankruptcy decision by the judge. They released a statement, and in that statement, how it could be used in the Ripple versus the SEC case using the fair notice defense. So we're going to go ahead and cover that. The total market cap for all cryptocurrency right now is $1,070,000,000,000. This is a 2.5% decrease on the day. Bitcoin right now is currently trading at $24,528. Ethereum $1,652, and XRP is trading at 36.55 cents. Now, we've had a great run up this week. Average cryptocurrency in the top 100 are basically up anywhere from 3 to 9%. A lot of the times when you have that much profits or that much gains in 1 week, again, no financial advice. A lot of people who are investors like to shave some profits and basically leaves less skin in the game on their end. And basically they say that they're playing with house money. So they either take their initial investment out and then just let their profits ride, or what they do is they take their profits and keep their initial investment in, and then hopefully it goes back up again and they do the same thing. Now, you guys can choose how you guys manage your guys' own funds. I'm not telling you what you guys should or should not do. That's just one strategy that people do, as well as another strategy, which is what I do, is where I buy and I hold long term. Because if you guys start shaving off profits, those profits that you shave off, you actually have to pay a capital gains tax. So you guys are going to actually have to monitor your guys' tax information, because you guys don't want to get audited by the IRS and basically have to get audited year after year after year because you guys did not appropriately file your taxes. Getting into our biggest gainers on the day today, or let's say our biggest losers, because we did have a red day today, down 2.5%. Like I said, we have a lot more negative coins than green coins. Our biggest gainer on the day is going to be GMX, up 7.3%, as well as XDC was up 2.5%. Our biggest losers on the day, though, Lido DAO, LDO is going to be down 17%, Filecoin 16.3%, and then MKR is going to be down 14.2%. Getting into some more news, though, James K. Filan post this week in crypto in Congress from Ron Hammond. And in this, I'm not going to read word for word about this because a lot of this is basically just repetitive. But he basically talks about how Congress, policymakers, financial institutes, your executives in those, as well as your federal government like your SEC and stuff, need to come out and come together and figure out exactly what happened and the reasons why the two of the biggest banks here in the United States failed, Signature Bank and Silicon Valley Bank. One was the second largest collapse in banking history, and basically the reasons why it collapsed and how they're going to stop it from collapsing again. Now, in my opinion, they're going to come out with different ways, and it might not always be the correct answer. They might try to spin it in their own favor to make it look like, hey, this is the reason why things are the way that they are. This is why it happened. And that might actually not be the true reason. So you guys need to do your guys' own deep dives and independent research on things. Because in my opinion, they're going to try to blame crypto. We've seen from Elizabeth Warren that she is single-handedly blaming crypto for this collapse. But in my opinion, it's mismanaging funds. You had the CEO, CFO, and CMO of Silicon Valley Bank, take out $4.4 million, sold those shares of stocks in the past 12 days. They also paid their executives 2 hours before the federal government took over and seized the bank. They paid them their yearly bonuses. And in my opinion, they over leveraged themselves. They couldn't actually have the money that they were supposed to have, and that's the reason why they went over. And they're going to try to play the blame game. Getting into our Watcher Guru news, the Credit Suisse was the bank that went down. It was in Switzerland. It's Switzerland's second largest bank. Currently holds $578 billion in assets. With this, they asked this Swiss central bank, basically, can you guys cover us if we need it? The Swiss central bank ended up saying yes, kind of like what the FDIC did here in the United States, as well as the federal government. Our FDIC insures banks up to $250,000 per account. With this, the federal government ended up stepping in and saying, no, they'll cover all of it. Don't worry. They're going to do it through some loan program. It's not going to come out of the taxpayer dollars. But this is essentially what Swiss's central bank did. They basically came to an agreement. And they might end up borrowing up to $50 million. The Swiss central bank might give Credit Suisse to basically stay afloat. In my opinion, should federal governments be doing this? I don't really have a say outside of other people's countries. You know, they have their own agendas and what they own want to do. But currently here in the United States, I can form my own opinions, and I don't think so. They need to give these banks and institutions regulations and enforcement actions if they do not follow them. The SEC should have been the one that single-handedly stopped this from happening to begin with, but in my opinion, they're too busy focusing on cryptocurrency and the exchanges that involve cryptocurrency that they basically turned a blind eye to the banks and allowed these banks to do whatever they wanted to do. Their executives failed, and then now they filed for bankruptcy, and then now the federal government steps in at the taxpayer's expense. In my opinion, that's where I see it. And in my opinion, this also came out too that the Fed swaps now shows 100 basis points rate cut by December. So they're basically going to cut the interest rate by 100 basis points or 1%. This couldn't come out of a worse time, in my opinion. And the reason why I say that is I know it looks like it's good, but in my opinion, it's bad. Right now, it looks like the federal government right here is basically trying to save face, showing our economy is better than it actually is. Don't worry, guys. By December, we're going to be down 1%. After this whole banking scandal that's been going on this past weekend, and then in the early days this week. So, in my opinion, this is the stuff where I talk about wait and look and see and actually like open your guys' eyes up to things. Because did they need to release this now? No, they could have waited to the 22nd when they actually either raise or keep interest rates where they currently are, but they decided to do it early on this week rather than waiting till next week when they actually hold their meeting. So, in my opinion, this is the reasons why I think the way that I do. This one was kind of funny. Somebody ended up probably running this budget van, and they basically put out an ad on it. This is the Fed chair, Jerome Powell, and it says right here, the Bitcoin logo, be your own bank. And I think that this is hilarious that they placed it here because Silicon Valley Bank cannot figure it out and manage their own funds. Another thing that I wanted to talk about, briefly touched on, is the Fed Now system. So the Federal Reserve to launch Fed Now instant payment systems in July. There's a lot of speculation with this. I'm still have to do a little bit more research, so I don't really want to comment too much on this. But from what I've seen, they're saying that they're not going to use the XRP token. And a lot of people are saying XRP token is dead. Obviously, it's not, because the XRP token did reach an all-time high of $3.84 without any Fed Now system, without any lawsuits, and not being listed on major exchanges. Right now, it is still in a lawsuit for over 2.5 years with the federal government. And it is still actively hiring individuals, Ripple is, as well as still getting utility outside the United States. So a lot of banks outside the United States are currently operating or in the works of operating the XRP token using the on-demand liquidity. So in my opinion, XRP is still here to stay. I'm still very confident in it. I'm going to do a little bit more research, but before I talk about anything more with this. And the last thing that I wanted to talk about with Watcher Guru is JP Morgan basically came out today and said that $2 trillion could be injected in the US banking system by the Federal Reserve's emergency loan program. In my opinion, this would be absolutely terrible. We already have a problem with printing too much money, and if we add $2 more trillion into the markets, this is what drove up inflation to begin with. It was when through COVID we started turning on the money printers, and basically inflation got out of hand. And in my opinion, this is going to happen, where it's going to get out of hand, where the federal government's going to have to step in again, keep raising interest rates, and basically hurt the American people, mainly the middle class. This one was really interesting. John Deaton replied to this one because a lot of people are saying that crypto is the reason why a lot of these banks failed. And this girl, Alexandra Hulk, says Credit Suisse, Switzerland's second largest bank, with 167 years of history, is down now 98% from its all-time high. Now, that is really a drastic decrease. So if you guys invested $100 into credit sussy at its all-time high, you'd have $2 left. Yet people say crypto's risky. I do understand that assets are risky. Obviously, you have to know what you're investing before you actually put money into it. That's why I and a lot of other people will tell you, make sure you guys do your guys' own research before you guys invest your guys' own money. You can trust with what I say, but also verify. And that's with anyone. I'm not a financial advisor, like I say all the time, but a lot of financial advisors will say, hey, credit sussy was probably good at the time. Now, we have Jim Cramer saying, last year that Silicon Valley Bank and Signature Bank were two really rock solid stock purchases if you guys did that. And then those are the two banks that went under, and he's considered a financial advisor and actually has his own TV show. So in my opinion, you guys can trust whoever you guys want to, but in my opinion, you guys, the biggest thing is trust your gut and trust your guys' own opinions on things from the research that you guys have done. This was really interesting. Kevin McCarthy, he's the Speaker of the House. He comes out right here and says, do you have a retirement plan through work? If so, you won't like Biden's new woke ESG regulations, which could use your retirement savings to fund political activism. We saw this with Silicon Valley Bank donating $73.4 million to Black Lives Matter and related causes. In my opinion, our federal government, as well as our banking institutions where we put our own money, basically to be like a keepsake, should not be playing political agendas with our money. And that's with the taxpayer funded dollars also. That's not what it should be going to. The banking institutions and our federal governments are supposed to be there to help its customers and also the citizens. The banks are the customers, and then the United States for its citizens. Now, he says the good news is Congress blocked it, but now the president is threatening to veto it. And I want to point this out because this does impact our financial markets, and this does impact a lot of people who are a little bit older and are getting close to retirement or are currently in the retirement process right now. Some more news though too, right here, Cowboy Crypto. Zach Rector ended up showing this guy because I've never seen him before, but he says banks are a part of the Swift Sandbox pilot for global payments. These are the list of banks. And in this, they show that France eyes Ripple's CBDC, central bank digital currency ledger for digital euro. Right here it says BC executive and Swift board member joins Ripple to support. So this just shows that Ripple and the XRP token could still be used outside the United States if it does not get used in the FedNow system, or it could still be adopted by the FedNow system also. So I just wanted to point that out there and highlight that. This was really interesting, though, because this is what I'm talking about with our federal government absolutely despising crypto. They came out and basically said any buyer of Signature Bank must agree to give up all crypto business at the bank, the two sources added. And this is from Street Insider. You guys can read this article, but there should not be a stipulation that whoever buys this has to get rid of the crypto assets. In my opinion, that's completely wrong. They should not be able to do this with individuals who want to buy and basically support a bank. And the people who actually have funds in that bank. They're putting stipulations on things and they basically want cryptocurrency to fail. But why? That's what we need to figure out. Why does our federal government want cryptocurrency to fail so much? Tom Emmer, he's a House Majority Whip. He comes out and says, today I sent a letter to the FDIC chairman, Grunberg, regarding reports that the FDIC is weaponizing recent instability in the banking sector to purge legal crypto activity in the United States. So if you guys want to, you guys can read this letter, but basically just shows how the FDIC is blaming cryptocurrency for the reason why a lot of the banking sectors ended up failing. But in my opinion, the true fault lies with the SEC because they are supposed to be regulating securities like stocks and stuff like that, as well as the banking institutions, and they failed to do so. Eleanor Charette comes out and says Ethereum co-founder calls on Gary Gensler the shining knight of decentralization. Will he be as complimentary if Gensler declares Ethereum a security under the proof of stake, which he has hinted at? And in my opinion, I completely agree with this. John Deaton was the reason why I saw this. But in my opinion, this guy, Joe, the Ethereum co-founder, has no clue what he's talking about because Gary Gensler ended up coming out and saying everything but Bitcoin is considered a security and might have a rule or enforcement action by the SEC, because obviously they still haven't come out with clear guidance yet or written law on what institutes a security for cryptocurrency assets. So in my opinion, he's just an absolute idiot, because he has no clue what he's talking about, and he basically wants everything to fail except Ethereum. Getting into some more news, though, Brian Armstrong, the co-founder and CEO at Coinbase, came out and basically said that he's super excited for global adoption, because Coinbase is going to operate in Singapore. It just shows that there's more crypto adoption outside the United States. This one is really interesting, and I wanted to bring it to light because this is definitely going to play a huge role later on, because we have to figure out where this is. But 2.5 tons of uranium is missing from Libyan site, International Atomic Energy Agency says. Uranium is super important, okay, because a lot of it is used to weaponize nukes, but it also plays a role in our renewable energy, because you can actually use uranium for nuclear power. So I wanted to bring this to light because a lot of people are talking about the Green New Deal and everything else that goes on in the financial markets and getting renewable energy. But in my opinion, again, I'm an environmental science teacher. I think nuclear energy is probably the most safe and also most cost effective and least harmful to the environment for renewable clean energy. Getting into some more news, though, Coinbase comes out and says Ethereum's shape shell upgrade is almost here. The upgrade will enable unstaking for the first time since Ethereum staking was introduced in December of 2020. Here's what you guys need to know. So you can basically just, unstake Ethereum at any time. This was kind of interesting, and I kind of like to see this. But, there's a bunch of people that are coming out and saying, well, your staking protocols might be considered a security. Gary Gensler is one of those. He ended up reiterating his point of view that a proof of stake tokens like Ether, which is Ethereum, might be securities, and that token operators and intermediaries should seek to come into compliance. Now, how are they supposed to come into compliance, Gary? Because obviously, there is no written rule or law on books yet that shows how we can be compliant. It's like me basically going over the speed limit. If that speed limit sign wasn't posted and I'm going 95 and a 65, yet there's no signs to say what the speed limit is, you're just basically driving on the open highway, hoping that you don't get pulled over. And then they say, hey, you were speeding. And you're like, well, how fast was I going? And they say, well, 95. And you're like, okay, well, what law did I break? And they're like, you were going over the speed limit. And you're like, well, what's the speed limit? And they're like, we can't tell you, but we know you broke the law, so now you have to pay a huge fine, or else you're going to go to jail. And in this sense, you're basically going to unoperate your guys' selves, or you guys are no longer going to be allowed to operate in the United States. And that's how Gary Gensler is operating the ruling and regulation by enforcement actions. This guy, Bill Morgan, ends up going after Coinbase, because this guy Paul Gruth, he's their general counsel for Coinbase, and he says that Coinbase doesn't list securities, but we would like to. We even petitioned the SEC to begin rulemaking on its issue last year. And Bill ends up saying, it says, if you guys don't list securities, why did you guys delist XRP unless you think that it is a security? If you do think it is a security, why did you initially list it, given at Coinbase's assets lists in listing processes is so rigorous? And what he means by this is XRP was listed on Coinbase. You could actually go on Coinbase and buy the XRP token. This is where I bought my first XRP token, was on Coinbase. But then it got delisted when they started to get sued by the SEC. But they said that, Coinbase doesn't list securities. So why did they initially list a so-called security? But according to this guy right here, who's the general counsel for Coinbase, says that they don't do that to begin with. So basically, this just shows that Coinbase needs to relist XRP and then actually take a firm stance on the token and show support for the cryptocurrency space. Because in my opinion, Ripple versus the SEC is going to be the biggest case in this century. Well, I'll just say decade. I won't go far as century, but biggest case of the decade for cryptocurrency related assets here in the United States for regulatory clarity. He ends up also coming out and saying everyone is committed to the rule of law should read Jay Wiles' Voyager decision. There are remarkable statements from the federal court with no skin in the game other than calling things as they are. Now, we're going to go over some of that stuff. So, Bill ends up saying that these are the parts of the decision that Judge Wines of Voyager Matter Decisions reads. Now, he first comes out and then he basically took screenshots of this document. It's a lengthy document, but it says right here, first, this is what the judge's words. First, I was told that the SEC staff believes that the VGX token has aspects of a security, but that the commission itself has not taken any position on that subject. Second, I was told that the SEC staff believes that Binance.us is operating as a securities exchange without registering as such, though once again, the commission itself has not taken any position on that subject. Although the SEC offered these clarifications as to what the SEC staff apparently believes, the SEC emphasized that only the commission itself could take a formal position on behalf of the SEC, and that the views of the staff did not constitute probably the official rulings of what they thought. He also came out and said right here, furthermore, although the SEC had obtained clearance to reveal the staff's beliefs, the SEC confirmed that it is not authorized and did not intend to present any evidence on the issues or even any further explanation as to the basis for which beliefs the SEC staffs may have. So basically, they're just talking about what they think. So it's like whoever works for the company, this is what they think. We might think that this is actually what everyone else believes, but we're not going to say that. So I'm a high school teacher. My current beliefs, I know, are different than some of the other teachers at my school or some of the administrators at my school. Now, just because I have certain beliefs or values does not mean that everyone at that school has those values based on what I say. So, this is the same thing as what the staff is doing right here. The staff can say whatever they want to or what they believe, but until they come up with a firm stance from the body as a whole and the commissioner, Gary Gensler, releases a statement or regulatory guidance, the staff can say whatever they want to, but there's still no clarity in the market until that's done. To the extent that the SEC contends that there are issues and bars to the confirmation of debtors' plans, I must disagree. In the first place, I reject the contention that the court and the debtors somehow are supposed to figure out for themselves just what aspects of VGX token might be considered to be aspects of a security, or just what particular activities of Binance.us allegedly could raise registration issues, and then somehow to offer evidence of the legal argument on those points. What he means by this is that basically, if I was invested in the VGX token or currently invested in tokens on Binance.us, I would have to go through their entire program, look at all of their tokens, do background checks on all of them, and then determine with myself if I truly believe any aspects of that company, that exchange, or each token that's listed constitutes a security. Now, I'm not a lawyer. I don't try to intend to be one. I don't try to say like, oh, I kind of know what this is, because obviously no one knows, because even the SEC doesn't know what constitutes a security. They still haven't come out with clear guidance, even though that's their job. Me as an individual who is just supposed to be an investor or a purchaser of a cryptocurrency, unless there's guidance, we are basically just operating in the unknown space. And you can't just basically, again, say, oh, you did this, so you broke the law, when there's no law on the books to essentially break. Now, he also comes out, the judge did, and says, here, I do not know how any party could possibly be expected to address the SEC's comments with the limited guidance that the SEC has provided. The SEC did not explain why the VGX token should be registered as a security. For example, leaving me only to guess as to what the arguments might have been. Similarly, the SEC did not explain why it thought Binance.us might be operating as a security broker. I do not know, for example, if there are one specific cryptocurrency token that have been traded by Binance.us, and that the SEC thinks that that was a security for which the relevant remedy might simply be to stop trading that token in particular. Or under the SEC has different theories. If we are to try to address these issues, we would have to guess what the issues were and would have no idea what to even be discussing at the right points. And I completely agree with this judge's interpretation. This judge does not have any skin in the game, like they said. They don't have any money into the markets. They're just basically operating from an outside perspective and just basically trying to understand the SEC's viewpoints, and they can't. And if the judge can't do that in a case, for a bankruptcy, how is the average investor supposed to? Somebody who is well educated, well versed on the rule of law, is basically getting information from the SEC's lawyer and still can't figure out what exactly is going on. This is another thing right here. This guy, Bill Hughes, comes out and says to the judge in simple terms, basically, Judge, you're being vague. The SEC, well, can we tell you in private? The judge says no, say it publicly. The SEC says fine. The staff thinks that Voyager's token is security and finance is a 1934 act exchange, but commission hasn't said anything formal, so reject the plan. Judge says, yep, no. So, in my opinion, this is basically what I understood from this, from what I just read previously. That basically we don't know, the judge doesn't know, the average person shouldn't know, because obviously the SEC does not know what they're talking about. James K. Filan says that here's the full page of a Voyager's bankruptcy decision, courtesy of I am Paul Gruel, describing the current and future regulatory environment regarding cryptocurrencies. You guys can read through this if you guys choose to, which I highly recommend that you guys do. Jeremy Hogan says, look for Ripple to file the Voyager judge's bankruptcy decision in support of its fair notice defense. It's good to see a judge put into words the problem that crypto projects face. And I completely agree with this. And this is what Ripple is probably going to be doing is filing this judge's decision into its fair notice defense to basically say that the SEC did not tell Ripple that it was doing something wrong, gave them fair notice to change or fix what they were doing, and basically just followed a lawsuit that's been going on for 2.5 years. They've been constantly, Ripple's constantly, and as well as other cryptocurrency companies, have constantly asking what constitutes a security. And the SEC for over 2.5 years still has not come out with clear guidance while they're in a major lawsuit with Ripple. Getting into some more of this right here, that basically right here it shows Ripple files letter regarding a recent Supreme Court case that supports Ripple fair notice defense. The SEC has not filed an objection yet to this. They still have time to do this though, but normally you would think that if you're filing an objection, Jeremy Hogan thinks that you guys are, I wouldn't say Jeremy Hogan, a lot of people in the Twitter space, because I don't know, he hasn't come out and blatantly said this, but mainly they thought that they would have actually come out with a rebuttal faster. And obviously they haven't filed an objection yet. Maybe they might. And basically, Jeremy Hogan says that they can still respond. Seems like a mistake to me unless the SEC has given up on winning the fair notice issue on summary judgment. That would be huge for the case. And then also right here it says that, basically that Ripple basically paid for its fees for the lawyers in the case, and that's what the massive XRP token sale was for. And then basically just saying that this is just ironing out the final terms of the settlement. And then Jeremy Hogan says ducks and runs, whatever you guys think that means. I don't know for sure, but basically I think it means get your guys' ducks in a line, figure it out, and then move on. The last thing I wanted to point out right here, and I'm assuming that this is just basically like somebody who paid this actor right here to basically file a message. And it was kind of funny to write here, but it says to Jay Clayton and Gary Gensler from Brad and Chris, extending the olive branch to Gary at the SEC for a settlement, and it would be best for the world, and the USA decided to use XRP. I think this is just a funny little thing that I wanted to put in there. This will be in the comments as well as anything that we've talked about. If you guys can't invest with the big dogs, stay on the porch. Add in anything in the comments that you guys would like me to talk about. At 500 subscribers, we're going to be doing another giveaway. So again, make sure you guys share my channel with anyone. Again, I'm trying to grow it as much as I can. And as an incentive, I will be doing another giveaway at 500 subscribers. Thank you guys. Have a good rest of your guys' night and look forward to the next video.